When it comes to investing in the stock market, choosing the right exchange-traded fund, or ETF, can be a daunting task, especially for beginners. Two popular options are SCHG and VUG. But which one is better and why? First, let's look at what each of these ETFs represents. SCHG, or the Schwab U.S. Growth ETF, tracks the Dow Jones U.S. Growth Total Stock Market Index, which includes growth stocks of U.S. companies. On the other hand, VUG, or the Vanguard Growth ETF, tracks the CRSP U.S. Growth Index, which also focuses on growth stocks of U.S. companies. In terms of investment goals, both ETFs aim to provide exposure to growth stocks, but they have different approaches. SCHG has a more diversified portfolio with over 1,500 holdings, whereas VUG has around 650 holdings. This means that SCHG spreads its risk more evenly across various sectors and companies, potentially leading to more stable returns. Another key difference is the expense ratio, which is the cost of managing the ETF. VUG has a slightly lower expense ratio of 0.04% compared to SCHG's 0.03%. While this may seem like a minor difference, it can add up over time and eat into your returns. In terms of performance, both ETFs have delivered solid returns over the past few years, with VUG slightly outperforming SCHG. However, past performance is not a guarantee of future results, and it's essential to consider your individual financial goals and risk tolerance before making a decision. So, which ETF is better? The answer depends on your investment strategy and preferences. If you're looking for a more diversified portfolio with a slightly lower expense ratio, SCHG might be the better choice. On the other hand, if you prefer a more concentrated portfolio with a proven track record of performance, VUG could be the way to go. Ultimately, it's crucial to do your own research, consider your financial goals, and consult with a financial advisor if needed. By taking the time to understand the differences between SCHG and VUG, you can make an informed decision and choose the ETF that best aligns with your investment objectives.